Switching gears here, the Goldman Sachs hopes, they're really in there, some of their hopes of a Fed pivot. Analysts from the investment bank, they're saying it's, quote, too early to price in a dovish turn in Fed policy because economic outlook isn't bad enough yet. And rate markets are still too volatile here. Now, there's a lot to really break down out of this, but once again, just another signal that it's not necessarily a Fed pivot that we're going to see, but perhaps the pivot, as we've been discussing with some of our guests and some economists that have come on the show, the pivot in the future, at least, would be the relief around just a pause. Just stop for a moment.
Well, I'm trying to figure out, after what we just heard from the IMF, the worst is yet to come. Should I be building a bunker underneath my parking lot where I live in my co-op development? I mean, that is just terrible language. I mean, that is really, I would say, extremely bearish, but as is this note. So what is a Fed pivot? Essentially, what that means is getting a signal from a key Fed official, Jerome Powell, Lael Brainerd, you name it, that they will likely slow the pace of interest rate hikes. Now, we have not gotten that pivot yet. We heard from Lael Brainerd yesterday that her speech or commentary was taken a little more dovish. I would argue not really dovish, more of the same, what we've heard from Fed officials over the past month. They're going to continue to raise interest rates very aggressively right through into the end of the year. And you look at this Goldman note by Cecilia Mariotti, I think she nails it. And she also puts this in, which I just don't think the market is taking into account, rising gasoline prices. Now, that is something that investors didn't have to think about for a month or so, but it's back in focus as a major, I would say, earnings headwind in the months to come.
You know, there's been a lot of course, the hindsight critical tenor around the Fed. And I think J.P. Morgan CEO Jamie Dimon, Chairman CEO Jamie Dimon, had said that, sure, it's easy to look at these things in hindsight right now. But then you've got even more out from Cathie Wood of ARK Investments. And they're saying that, in summary, they kind of look at this entirety of what the Fed has taken a look at in themselves and what they've placed so much emphasis on. And they seem focused on two variables, in their view, at ARK that are lagging right now. And we know that the Fed focuses on lagging indicators. That is the nature of some of the economic data that comes out. That's why investors and broader Wall Street, the investment community, looks at some of the best forward indicators possible, whether that's what we're going into in the slew of earnings that are slated to come out as well, trying to get a better sense of some of the analysts and how they're updating their own guidance and ratings going into this earnings season around companies all the way from the banks themselves into some of the most consumer-facing parts of the economy. And that is what we're going to get into later on this week with airlines as well. And so from travel to how you're stocking up the grocery shelves or your refrigerator and so forth, we're going to start to get into what those actual forecasts look like from these companies that actually have a pulse on the consumer. And from the banks, it's going to be interesting to hear about exactly where they see some of the savings rates for their customers at right now, too, to really get a sense of if there still is a strong balance sheet at the household level, or if consumers on the other side are starting to lean so much into credit just to try and mitigate any type of the near-term headwind that they have on their finances.
Right on. And into those headwinds, quick mention here, in that Goldman note, they say they remain tactically cautious in our asset allocation on equities over the next 3 months. So it's another way of them saying we just don't like stocks in the earnings season. Very simple way to decipher that. All right.